Ladies and gentlemen, I got a banger of a video for you today. We have so much to cover. Palantir, incredible news. Tesla, new price target updates. We have more banks with their hand in the cookie jar with the Archegos Capital, more information coming out. We have Apple being downgraded and some news about Teladoc that have been misrepresented in mainstream media, which I want to clarify. So a lot of bangers, hang tight. And if this is your first time here, the pace is a little bit fast, as you can see, but it's good. I don't need to click nothing, not smash nothing, just listen up. I just want your attention. Don't do anything, just listen. By the way, my name is Tom. I used to be a senior financial analyst. Now I'm a full-time YouTuber giving you my knowledge about the stock market, the economics, the financial world, all that good stuff. Just listen up. Don't do anything. Now check this out. For the first story of the day, we gotta talk about Tesla. We have some incredible news coming out with regards to Tesla. Now, as you remember, Wedbush actually upgraded their Tesla price target to $1,000 a few days ago, including a $1,300 price target for the bull case. Now, Wedbush is a known bull on Tesla, so no huge surprises there, and this isn't the piece of news I'm about to talk to you in this video. Now, what I do want to point out in this video is that Sawyer Merritt put out on his Twitter feed this. Now, Sawyer Merritt has been on the channel before. This is his second time. He's legit. Go follow the guy. And according to Sawyer Merritt, this is what happened. Morgan Stanley put out, allegedly, this newsletter to their clients saying, and I'm quoting, "We believe our investors face greater risk not owning Tesla and their portfolios rather than owning Tesla shares in their portfolio." Essentially what it means, it's much riskier not to get Tesla shares these days than actually getting it, according to Morgan Stanley, based on this tweet from Sawyer Merritt. I don't know if it's legit or not, but this guy seems legit, so I tend to believe it. But again, we need some more confirmation. Now, this is huge because unlike Wedbush, Morgan Stanley are not really well known to be as a huge Tesla bull. And for them to make this statement, you have to understand that this went through a lot of cycles of approvals. Lawyers, risk officers, a lot of people had to sign off on them saying that. For them to say that, it means they have 150% confidence that this is very accurate. Otherwise, they're going to be in a world of pain if this doesn't pan out. And where do I stand on this from 10,000 feet high? Very, very simply, in two sentences. First of all, I think that a lot of investors, institutional and retail investors alike, are now gradually starting to understand that Tesla should have never been included in the tech sell-off of mid-February. They have nothing to do with the extremely speculative companies that people sold off. They have a completely different approach, completely different business model, and they're in such a stage that they're pretty much about to take over their entire industry. Now, that is not a bad thing because for me, it represents an opportunity to buy more shares at a better price, which I'll be doing this week even more. But you gotta do you, do your own research and all that stuff. Let's move on to the second piece of news. And now let's talk about Palantir. This is incredible. Palantir, according to this Reddit post, are now being offered a sole contract by the Air Force Nuclear Weapons Center to provide data services. Essentially what it means in simple English is that the Air Force basically says, well, we can ask for proposals because literally there's no company in the goddamn universe that can provide these services. That is why we're directly offering this contract only to Palantir. They're the only ones who can do this job. If that reminds you things I've said in the past few weeks, you're not mistaken, because I've literally been preaching this, that Palantir is the only competitor in this whole new category which it created. Nobody comes close. And here's the cool part. The Reddit post also includes a link to the actual so-called proposal. I don't know how authentic that is. I'm not going to take responsibility. But if this thing is legit, if it's authentic, oh my goodness. So check this out. Now, this modification will be executed via a limited sources justification in accordance with whatever rule. The justification being only one source is capable of providing the supplies or services required at the level of quality required because the suppliers or the services are unique or highly specialized. Oh my goodness. If this thing is legit, this is pretty much the Air Force saying, well, the only company in the universe that can provide us these data services at that level of quality is Palantir, so no use even asking for bids from other companies. That proves every single thing we said about Palantir, and that proves that all y'all day trader mentality people shouting in my comments, well, Palantir is down, Tom, are completely short-sighted. And now let's talk about Apple, and it seems that even Apple is not immune from mainstream media nonsense and gobbledygook bullshit. And the whole story is that Morgan Stanley reduced their target price for this stock from 164 to 156, still staying at the same rating. essentially saying, well, it's not 164, it's 156. If you actually read the entire report, which most of you won't do, and I'm assuming a lot of mainstream media reporters won't do, you can actually see that in the report, they're saying pretty much the same thing I said in my video from 1 month ago. You can go and check it out, that Apple is phasing out from hardware to services. Margins are going to be better. Growth is going to be better. It's definitely trending towards services, and that's a good thing for Apple. New growth engines for Apple are coming. And the only reason that they're reducing this price isn't because something fundamentally has changed with Apple. No bad news. In fact, only good news. But because their competitors, their peers, are trading at lower multiples, essentially EV to EBITDA, EV to sales, all that multiples, that's why they think that it should be priced a little bit lower at 156. And if you just take a look at tip ranks right here, I'm going to show you something interesting. By the way, I've been using tip ranks for about a year. If you're watching my videos, you know I've been using it in pretty much every single video I do. If you want to subscribe and get their premium package, there's going to be an affiliate link below. You'll be supporting the channel. And now I'm going to show you something cool. Is Apple really in trouble? Well, not really. Let me show you. So these are the top analysts. These are the 5-star ones. As you can see, every single one of them actually has a buy rating with an upside. Everyone thinks that this share is underpriced, undervalued. Does this mean that Apple is a bad stock? Does this mean that Apple is overvalued? Does this mean that Morgan Stanley reducing from 164 to 156 mean anything? No. Looking at that is really important once you read the headlines. If you just read the headlines, you might think, well, Apple is in trouble, Apple is downgraded. No. The entire community is saying that Apple is actually undervalued by a lot. Look at these percentages. My target price for Apple is $170. Them going from 164 to 156 is pretty much meaningless. It's fluff. Who cares? Oh my goodness. It seems that Morgan Stanley have pulled a fast one on the entire market. Of course, I'm talking about the Archegos Capital meltdown aftermath. It seems that Morgan Stanley were the party that actually jumped the gun before this whole thing panned out. They had a gentleman's agreement, reportedly, accordingly, allegedly, with these other banks to slowly sell shit off without people noticing. And instead of following the gentleman's agreement, these guys have broken out of the pact and actually screwed Credit Suisse and Goldman Sachs by selling $5 billion worth of shares on the night before the block sales. Now, essentially, this was the trigger. Once they did it, the other guys rushed through the door and this whole thing started. So it seems that Morgan Stanley actually pulled a fast one on Credit Suisse and Goldman Sachs, but that's not the only piece of news. Look at who they sold it to. I'm going to read you from this article. It seems that they sold it on March 25th, the night before the massive sale of securities, and look at this. They sold it to a small group of hedge funds. Now, they actually made these hedge funds think, look at this, at a discount. Morgan Stanley actually sold a lemon to these hedge funds, making them think they're getting a great deal. They basically told them, well, here's a Camaro at $15,000. And these guys are like, oh yeah, what a great deal. And they open up the hood the next day and it doesn't have an engine. So do I think Morgan Stanley will get sued by these guys? I think some of these hedge funds might have a case against Morgan Stanley. If Morgan Stanley knew material information about this stock, and they should have told the buyer to beware, and they didn't. They hid stuff. Like, for example, the Camaro not having an engine. The other party might be able to sue you. I don't know. So we might see some lawsuits from these hedge funds. According to what I'm seeing here, they might sue Morgan Stanley. Who knows? But this was one hell of a 4D chess move for Morgan Stanley to pull a fast one on the entire market. And now moving on to another piece of news proving how mainstream media is all about the headlines, the sensationalism, and not about the actual news. Teladoc starts Q2 with 61 million of insider selling. Oh my goodness. Glenn Tullman, a director at Teladoc Health, has sold 61 million worth of company stock. You would think that this thing means that Glenn thinks the company's trash. Him selling these shares right now means he doesn't have faith in the company. That means you should be selling too. Not necessarily. Don't believe the bullshit you read in mainstream media. What happened here in mainstream media is not telling you is that Glenn had an expiring option agreement that should have expired on April 30th, within 23 days. If he doesn't exercise these options within the next 3 weeks, they go away. But here's the kicker. When you exercise options, you go out of pocket. You got to pay for the actual execution of the options. You buying shares. So immediately he sold it off as planned, by the way. Nothing was surprise here. Everybody knew that this is a planned move. So essentially he exercised the shares. he actually paid some money and immediately sold the stock to cover his out of pocket. So whenever people are talking about insider selling, you gotta be careful and see what the real story is, because I think here with Teladoc, it's not the entire story. You gotta look at it with context. As always, huge thanks for the channel members and the Patreons for making this possible. Thank you so much. As I mentioned in my previous video, if you want to submit a question for me to answer either in a private message or through a video like this one, you can join our Patreon community and submit questions. I'll see you guys in the next video. Thank you so much.